Welcome to the Hurley Investments Market View Commentary for, I got to change that date. Thought I did change it. 07/06/2026. My name is Kevin Hurley, and I've got a bunch to go over with tonight. If you can still hear me, let's just type something in. GoToWebinar has been making some changes. I am learning how to work with GoToWebinar. So one more time, if you can hear me, just type something in so I know that I'm good to go. Thank you, Tony. Appreciate it. Nathan, always glad to have you. Perfect. Abraham, perfect. Thank you. Okay, let's talk a little bit about last month. Last month was a down month, not horribly bad for us, but it also obviously was not one of the our best month that we've had. The S&P experienced a total loss of approximately 1.3% in June. This decline brought the closing down to 7,499.46 after starting the month at 7,600 is a record high. We finally interrupted a two-month winning streak. I don't have it for the month, but for last week, financials were taking off. Communication services, consumer discretionary, healthcare, industrials, materials, consumer staples. Technology was down. Utilities, energy, and real estate were the big losers. That kind of is how our month went. So when we're looking at the month, we saw a broadening of stocks. We're now seeing the concentration maybe not being so much for one single, well, it's actually been two. For 2 out of the first 6 months of the year, we have a broadening of investment opportunities. It's not just going to the Mag 13 or Mag 19. Technical backdrop. The S&P 500 has a new long weekend and a strong technical position. Those stretched in spots. The index sits about 2% below its June record, and it trades above the 50-day simple moving average and well above its 200-day simple moving average. The momentum is constructive without being extreme. The 14-day RSI reads about 55, comfortably off the overbought levels that it hit in April. Right now, the key point is that this leaves room to run. We are starting our earnings session going into next week. Next week, I'm pretty sure Alcoa reports. I believe that's on Thursday. Let me check. It is on Thursday. Next week, we start the banks. In fact, Tuesday next week, big bank day for earnings. So a lot of people have asked me, and this is going to be a let's answer your questions kind of webinar. Please feel free to ask more as we're going into it. But we have a laggard problem on the Mag 7, the original Mag 7. We'll call it the Lag 7. Google's up 15%. Thank goodness we're in Google. Apple's up 14%. Thank goodness we're in Apple. Amazon's up 5%. We're never going to go into Amazon. I'll explain why. Nvidia's up 4%. Meta's down 12%. Tesla's down 13%. We'll never go into Tesla. And Microsoft is down 19%. While the semis are up 88%. So here's the question. And I kind of have it down there at the bottom. Why do we think the Mag 19-ish, I'm going to go ahead and call the Mag 7 because it's really the big Mag 7 that we're in, are the play into the end of the year. And here's my reason why. And I'm going to work the numbers for you. When we talk about price per square foot, what do we mean? When we talk about price per square foot, what are we talking about when this is in regards to real estate? What is that price per square foot? And if you don't know, type a question in. But when we're talking about price per square foot, ooh, there we go. It could be the purchase price. It could be an earnings price per month. It could be a value price per a part of the building. Let's see, a couple other questions came in. Rent price, it could be a rent price. I'm going to put that into the value price, but I like that as well. Now, when we're looking at the Mag 7, let's go with Google, Meta, Amazon with AWS. They're building these data centers, right? Does anyone know how a data center price per square foot is calculated? If you do, write it in. If you don't, give me a bunch of question marks. Does anyone know what a data center price per square foot is for these big 150,000 square foot data centers? How come no one's typing anything in? I want everyone to type in some question marks if you know. There you go. Thank you, Russ. Want to make sure everyone's still hearing me. All right. So it's interesting because their price per square foot is their price per data data captured per minute per server. So let me run that to you right now. The average that I'm seeing is $23. So if I work those numbers, just to give you an idea of how big this can be, $23 per minute. And again, understand this is a computer that's daisy chained using Veris, Blackwell chips, just gathering data. If we did $23 per minute, each hour generates $1,380 of revenue. Each day generates, and remember, they don't stop, each day per server generates $33,120. Each week per server generates $231,840. And each year per server, they don't stop. generates 12,000 $12,055,680 a year. And let's go on the small side. Someone tell me how many servers are in these buildings. How many servers are they cooling in these buildings? Someone give me a number. In a smaller data center. I don't know how much is in the acreage one, but think about let's do 100,000 square feet data center, right? I have 4 to 5,000 to 150,000. So that's interesting. So if they have 5,000 servers, we're talking about 60 billion, 278,400,000 that's being generated for 5,000 servers. Tony, I might go up to 150,000 square feet for, but I don't know how many servers that is. I would think that that 5,000 servers in a building, and yeah, it does depend on the side. I'm not sure I could calculate that, but basically, if we did 15 times this, we're talking trillions of dollars. There is a significant amount of money that's being made with data centers. Put it this way. Who pays for this? Schools, universities, governments, Boeing, Apple, Amazon, right? And now they're directing it out to other people. Walmarts, Targets, Costco. There are so many people that are using the data capture, not the cloud service, but the data capture. Ford, General Motors, United Healthcare, Select Health. There are so many companies willing to pay money for the data collection to pinpoint and finite advertise to us. Can you now see how much this is such a better use of retail space? It's really hard off of 150,000 square feet for Target, for Walmart, for Under Armour, for Nike, for Lululemon to compete with these kinds of numbers. And all they got to do is run the machines, keep them cool. Can you now see how these servers, Tesla, Abraham, that's a good one. Can you now see how these servers are making so much more money than standard retail rent, the brick and mortar sales that we have out there for companies. There is so much money available here that I can understand where the Mag 7 or those that are creating AI, even though they're putting hundreds of billions of dollars, 150 square foot with 5,000 servers generates 60 billion in a year. Look at the return that these people are going to make with their servers. That's why we're sticking with and we think the Mag 7's not dead. Okay, here we go. Someone asked, why do we not invest in SpaceX? And this just comes down to it very simple. For anyone who has taken an education in the stock market, please tell me what is the most important level 1 indicator of the strength of a company. Think of that stool that they talk about, right? The types of analysis. I'll go analysis / indicator. What is the number one that we need to know about? There's this type of analysis and this type of analysis, and they rank them. They're actually what? 3 or 4 different types of analysis. What's the number one type of analysis? Cash generation. Abraham, what does that fall under? What type of analysis does cash generation fall under? It's kind of funny because I probably didn't say that very well. Level 1 education always starts off with fundamental analysis, technical analysis, and then it goes to sentimental analysis. And the saying is fundamental analysis trumps technical analysis, but in the short term, sentimental analysis trumps all. Why do we not invest in SpaceX, Amazon, Tesla? The simple answer, fundamentally, all of those three are or were horrible. Fundamentally strong companies. Amazon went, what, 20 years without making a penny? Tesla's still not profitable. In fact, Tesla lost more last quarter than the whole previous year because they accepted Bitcoin. And the Bitcoin value fell by 60%. And they didn't cash it out. SpaceX, here's the real reason nobody pays Hurley Investments to gamble with their money. Well, Tesla's made money. Some people made money in Tesla, Amazon. No doubt there's some people that are going to make money in SpaceX. And there's some companies that we can make money in that we don't like as companies. But if you've ever had an education, or if you believe in stock market education, the number one first class or second class that they teach you is fundamental analysis, cash flows, debt to equity, return on assets, return on equity, return on investment capital, float, volume, shorts. These are gambling type of stocks. And at Hurley Investments, we don't gamble with your money. We do our fundamental analysis. Kevin, you could have made money on Amazon. I know. There is money to be made on Tesla. There's probably money to be made on SpaceX. But when they take in $83 billion and 44 has gone to pay off past debt, and they're losing $4 billion a quarter, they've only got like 10 more quarters till they're in deep trouble. Well, it's the satellites and it's this and it's that. They're going to do data centers up in space. Elon Musk said there's going to be $1 trillion of revenue. Just because it's up in space doesn't mean that it cools off the chips. They actually need to find a way to push air and cool chips before they put any servers into space. Which, in all honesty, is it's a physics question that can't be answered right now. They lost over $4.23 billion the last quarter. And we're going to make that up by putting people up, up in space to Mars. The numbers don't add up. Plain and simple, if anyone is telling you a good investment is SpaceX, then they've neither had a stock market education, or they're ignoring their stock market education, or it sure as hell better be a trade. But if they're calling it an investment, you guys have every right to call them out and call bullshit. Because SpaceX is far, so far away from being a company that has this opportunity in it. If you guys wanted me to gamble with your money, you should have called and let me know. But we don't gamble with your money. We're not in SpaceX. We were never in Amazon or Tesla, because fundamentally, the numbers don't add up. For the same reason, someone asked me, well, why haven't you been in oil? This includes transportation, refining, sales of oil. Kevin, why weren't you in oil? Well, it's kind of simple, right? We followed our past history. But transportation, well, we had a war with the Gulf. In case you didn't know it, transportation numbers are going to look like dog crap for the next, geez, I don't know how long. But probably for this year, they're not going to make up what they lost for that 100 days or so. Well, Kevin, what about refining? There's no pure refinery type of oil producer out there. Valero's probably the best one. But refining usually goes through domestic sales. And with what we just went through, yeah, they're going to have a good quarter. But oil's going down to a cheaper per barrel price than it is valuable for companies to pull it out of the ground and pay the people for it. OPEC just released the reserves. They want to sell their excess first. We're going to see oil plummet in value. Why do we not invest in oil? Because we studied past history and oil's not a great investment into, well, through the Trump administration. Probably not if we get another Republican in office afterwards. Let me make a simple oil prediction. Because the price of oil is dropping, no rate cuts or raises this year. Previously, I thought we would have 2 rate cuts, and I am changing my mind. Oil's going to come down. They need another quarter to see it. We're going to run through the quarter of Christmas, a lot of buying. No rate cuts or raises this year. Raises. We have the minutes coming up on Wednesday. We'll pay a lot of attention to it. Earnings estimates. I'm starting to keep track so we can pay attention to when these earnings are coming up. Next Tuesday, heavy banking day earnings. The big picture. Market leadership is broadening, which is indicative of a bull market action. Rising earnings estimates have improved for PE multiples. Basically, with this pullback in technology and the fact that other market sectors haven't moved as fast, we're at a great Goldilocks opportunity for the market to rise another 5 to 7% into the end of the year. Great article to read. Couple big risks. And again, I don't know why briefing the last year and a half has used these scare tactics. Real average hourly earnings has been negative for 3 months in a row. Well, no kidding. Companies were tightening their belts and are a potential deterrent for discretionary spending that could drag on the economic growth. I call bullcrap. We spend money on vacation in summer. We spend money for Christmas. I watched in 2008 people buying gifts, phones, increasing their monthly payments, knowing they were going to lose their house. We are a consumption, selfish driven market and people. We're going to keep spending discretionary income until there's none left. Based on FINRA data, margin debt relative to GDP is a record 4.44%, leaving it well above its 3.3% long-term average. Again, the simple comment here is no kidding. Now, someone's going to tell me this is under Trump. Well, not exactly. The fact that we're paying higher interest rates now on debt that was previous to Trump just means not a Trump problem, not a Democrat fault. In fact, for presidents coming forward, it's based on what was done previously, and there's Republicans and Democrats in all of those. The higher the interest rates go, the more interest we pay on our debt. This is just a simple mathematical equation. For the first time in recorded history, we're above the pretty sure it's 4.3, but we're above the 4.3% of our total GDP is going to pay interest on our debt. All right. The Dow, no one really trades it anyway. When you hear someone talking about the Dow, they are someone that is not managing money in real life. But welcome to the Dow being slightly overbought, whereas both the S&P 500 have room to go on the RSI, the NASDAQ, room to go on the RSI. Technically, all three are bullish. As I looked at July, I first put a negative 1.5%. It would not surprise me to see our market go down another 2 to 3%. But when we come to our earnings at the end of July, that middle to end part of our earnings season, we'll see a bounce off of that 200-day on the NASDAQ. It was the 50-day on the NASDAQ. And we'll see technology getting that bid into the end of the year. Not much happening for earnings this week except for Delta Airlines. Not much really happening by way of economic reports except for the FOMC minutes. And definitely people are going to pick through it, but I think the FOMC minutes are a non-issue. Some pretty interesting articles for you guys to read. Top performing hedge manager LaFont explains his biggest AI trade. It's going to the semiconductors. He's talking about chips. Chips are where you're going to see the growth running into the next year for him. Magnificent Seven stock pullback now looks like a buying opportunity. Strategist says yes. The S&P, the Magnificent Seven, other than the two that we're in, the Google and Apple, are lagging the S&P 500. There is a great chance because people are starting to calculate how much money these data centers are going to make. As soon as that's out, watch the Mag 7 or those that participate in data center data collection should take off significantly. I put this in here for Schwab because I absolutely hate Schwab. Schwab, top 3 income ideas for the rest of 2026 when we should have a bounce higher going into the end of the year. Well, let's stick it in treasury bonds and corporate bonds. A fixed income when the expectation is at least a 5 to 7%. Let's stick it in the 10-year note that ranges between 4 and 4.5%. So you can make 2% the rest of the year. Hey, there's some corporate bonds. 5.2%, so you can make 2.6% into the end of the year. The Spider Portfolio Corporate Bond, 5.27%, so you can make 2.6% again in the end of the year. You want to talk about stupid? I worry about people that are getting taken by Schwab, that they think you're looking at a 5 to an 8% return. So stick your money into something that'll make only half of that into the end of the year. They talk out of both ends. You want a BS management company that manages money? Here it is. Go to Schwab. They will screw you every chance they get. Earnings, Micron stock jumps 15% as soaring prices for memory crunch leads to quadrupling of revenue. Why did we keep ourselves in Micron? Why are we glad to see it trying to stay around that $1,000 mark? That's the reason why. We need to stay with Micron above 800 till the end of the year to make some fine, fabulous returns. Interesting article. I got this one because I run some of my own cows. Americans are paying record prices for steak. Here's why the demand isn't cracking. Yes, meat prices have still been high. That's probably one of the most inflationary problems that we're running up against. People want meat. And Jim Cramer says I trade has shifted. These stocks are now leading. Obviously, it's SanDisk, it's Nvidia, it's going to the chip makers. But again, don't be surprised if you see the Mag 7 take off when people run their own numbers and they see just how much these companies are going to make. With that said, Abraham, would you please explain how you use a Williams percent R? Correct. So for me, I grew up on the Williams percent R. And all it is down there at the bottom, all the Williams percent R for me is a medium stochastics. Overbought on the top, oversold on the bottom. This is where big money puts their money to work. So I just use overbought, oversold. It works better for me than the Bollinger Bands, and it's just a more accurate big money, medium stochastic. Where is institutional money putting their money into, and how quickly can it go into certain indexes or certain stocks? So I used Williams percent R to help me out when we have an RSI that is laying on the lines or a MACD that's laying on itself. This gives me the opportunity to see some of that explosive growth. I don't know if you remember in April, but in April we took some profits in March and we picked up more shares in April. Kevin, why did you do that? What made your decision this year to do that? Williams percent R on the NASDAQ. Yes, our explanation or our thought process was, well, how far longer could the war go? So that's where we said there the end of March, end of a quarter, let's cash in some profits on puts, let's add some more shares, let's expect a bounce going into the next quarter. Boy, did we get it. Really, January and April are our two big months this year. The rest of the months don't look particularly good. Kevin, how are you guys still up? Thank you, Apple. Thank you, Micron. Those are kind of the answers there. Abraham, good question. Okay, any other questions you guys have moving forward? We're really looking forward to earnings, getting some earnings movements. We're going to expect quite a bit of movement the end of July. But for this month, we're looking to see some good returns due to earnings. And in all honesty, we're probably going to see, again, the bulk of our returns like in January, where we were up about 8% in a month, 7.8%. We're expecting to see that the last 3 months of the year. And again, it's just a matter of people working their numbers. And yes, I am trying to stall to see if anyone else has any other questions. If not, guys, I appreciate you being with me tonight. I look forward to seeing you guys next week. And I hope, thank you for those of you that were emailing me questions. I hope our commentary tonight answered those questions that you guys were asking me via email. If not, ask it again to me this week, and I got next week's covered for you. Guys, have a good evening. Appreciate you being with me. Main points to work on or to think about. We do like our positions that we're currently in. 800 is the line in the sand for Micron. Stays above that, we're taking maximum profits on leap bull call positions. We really do like our Mag 7 position still going into the year. We are going to be heavy in cash at the end of the year as we take our profits. Some people have asked me, well, Kevin, when do you take your profits and why? We take our profits when we see these stocks hit their maximum yearly, what we worked in January, price targets. When they hit their price targets, they're fully valued. We want to take our profits. That's our decision factor right there. We're not in it to gamble with your money. Line in the stands are pretty easy to calculate. Everything we do is mathematically based. Guys, have a good evening. I look forward to seeing you next week. Hopefully, you had a wonderful 4th of July and enjoy that World Cup games, guys. I'll see you next week. Have a good evening, everyone. Bye bye.